Hi, folks. Dan Bird again. This is still Friday. It's now quarter till 4, so 15 minutes till the market closes. I'm doing this video because I will be in Cabo this week, so I want to record something ahead of time just so it can get posted. Let me share my screen. The purpose of this one is to continue my Technical Analysis 101 training session that I did a week ago Monday, just to finish out my favorite chart style and why I create it that way. And this is specifically for a question that someone had in the chat room on the YouTube video about MACD, moving average convergence divergence. So I'll wrap all that into one. So let me share my screen. And before I jump into it, of course, if anyone is interested in my newsletter, just go to breakpointtrading.net and click on this box to get the free newsletter. If you want to be reminded each week, then register your email. There's no credit card required. We don't share emails or sell emails or anything like that. So this is just if you want to be reminded. You don't have to. If you just want to come here and click on the box, you can get the newsletter that way. So one other thing, just to finish up my last video about the status of the market, and also the alert that I sent out to subscribers, to my annual subscribers yesterday, kind of alerting people of what I was seeing. I'm looking at the market to see what we're doing today. The thing that I pointed out was the market bias matrix, which I do every day, and I actually just updated this. Let me refresh. I just updated this for today, so there's the 15th. And you can see the things that are highlighted with boxes shows the change from yesterday. So consumer discretionary changed from bull to bear. You can see the number of changes to bear. Software, these are the short-term signals, short-term, medium-term, long-term. So software changed to a bear, cybersecurity changed to a bear, biotech changed to a bear. Banking, actually the midterm changed to a bear as well. And the discretionary versus staples, which I touched on in the last video, also changed to a bear today. So just confirming everything that I was saying. But more importantly, if you just come to this page and look at this one little chart right down here, and this is basically a accumulation of all of these signals over here on the left. It's really the ones here in this colored day over day, week over week trend put into a line graph. So not only can you see the colors as they change, but you can also see the lines over here. So I pointed out in my alert that the orange line is the short-term line. You can see that it is really dropping off a cliff right now. And today, the medium term also started to go down. And if you look at the overall trend right up here, while it's still essentially in an uptrend, if you draw a line from this point through the bottoms of these points right here, you can see that it has now broken that trend line. So if you do nothing else on this page, but look at this one little chart right here, it will give you a good sense for what the overall market's doing. And of course, you can click on any of these buttons. So if we want to look at discretionary versus staples, there's what it looks like. So when the blue crosses the red right here, that's a medium-term signal. But one of the things that I pointed out is as I do these every day, it gives me an opportunity to actually look at every single one of these to see what they look like. And even though, so you can see that's turned to red, even though it may not actually have crossed over like this one here, the NASDAQ has not crossed over, but I can actually see that it's getting really close. Here's another one. Hasn't crossed over yet on the Dow, but one more day and it will. Here's the NASDAQ. NASDAQ is not quite there yet either. It's 24 cents away. No, 14 cents away. 14 cents away of crossing over too. So one of the advantages that I have in putting that together is I can look at these every single day. And even though it is not a bear yet, like the NASDAQ 100 right here, one more day and it will be. So I can see things that are coming ahead of time. And that's what I put in the alert. to subscribers, but I was starting to see a lot of these rolling over, even though they haven't actually signaled yet. They're getting very close. Another day or two down market, and a lot of these are going to start signaling. And what that means is not only will the short term be much lower, but the medium term will too. And eventually the long term, it'll pull the long term down as well. So anyway, just wanted to point that out. Another little tidbit of what I was seeing in the market. So let's now talk about the MACD. First, let me show you what I showed last Monday. So I used Palantir as my example, and I showed how to create resistance, support and resistance lines and it actually did it in real time. So you didn't see anything on the chart. Just as the chart moved sideways, I actually pointed out where you should draw the line. If you want to go back and look at that video, I don't remember the date, but it was a week ago Monday. But that's Palantir. That's what it looked like. And actually, is this updated? Yeah, this is updated for today. So you can see it was actually up here. It was above this support line up here, and it's broken through that support line, and now it's breaking through the 21-day moving average, and the pink line is about to cross over. So again, it hasn't signaled yet. And if you're just looking at support lines, you want to wait till it gets down here to 21, but it's starting to get there. So I want to take the next step now and show you. I go back to the dashboard, and by the way, here's the status of the market right now. So still down almost 200 points. Here's the daily chart that I showed in the last session. Right now, we are 10 minutes away from the close. So when I showed it the last time, I said this is starting to move up. But now that we're getting, the last half hour, it's actually starting to move down. Down here, you can see the volatility index went higher today and then pulled back. So that's a good thing. 10-year treasury is just sort of hanging in there at 4.3%. And the advanced decliners are barely above zero. So there are a few more advancers than decliners. So that's a good thing. But we want to see how this closes the day out. We'll look at that near the end. All right, so let's talk about the MACD. Let's talk about my preferred chart style. So this is my default. So anything that I type in here, and I'll use Palantir again. That's the chart that comes up. This is the one that I start with, that I look at for everything that I do. And I talked about all of these things here, a little bit about the one at the bottom. Talked about all of these on the Monday session, so you can go back and review that. But these bars are called impulse bars. They show you trend and momentum in one bar. So if it's green, both trend and momentum are going up. It uses a 13-day moving average for trend and a 13 MACD for momentum. And that's what we're going to talk about today, is the MACD. If it's blue, then one of those is different. And I call that's basically the neutral bar. And if it's red, then both momentum and trend are going lower. So that's what that looks like. So let's talk about this one on the top today and the one on the bottom. So first, we need to understand the MACD, moving average convergence divergence. What does that mean? And that's what somebody asked me. What does a moving average convergence divergence mean? It's a trend following and momentum indicator. It basically, you can see right here, here's the trend. I don't know what chart this is, but the histogram down here, basically, the MACD is made up of two things. First, the difference between two MACD numbers, basically. So the standard is 12 and 26. So the difference between 12 and 26, and then calculated based on a 9-day signal line. So the red line here is the signal line. So that's the 9-day moving average. And the MACD line is this calculation, taking two moving averages and subtracting them. So that's the MACD line. Now, the histogram has the MACD line minus the signal line. So it's essentially the distance between the MACD line, which is made up of the difference of two moving averages, and the signal line. So if that distance is pretty great, then the histogram will be bigger. You can see over here, the distance is pretty pretty wide right here. So the histogram is much bigger. When that distance gets narrower, then the histogram gets narrower. It essentially shows you the volume, essentially the volume of the move, of the momentum. How strong is this momentum? That's what the histogram down here shows you. Now I'm going to use these when I show you how I put them on my chart. But that's essentially how it works. And it's called the moving average convergence divergence, because as these lines diverge, if they're diverging under the signal line, then that means it's in a downtrend. If they are converging, coming back closer together, that means the downtrend is ending. If they're diverging above the signal line, that means the uptrend is in an uptrend. And if they start to converge back towards the signal line, that means the uptrend is running out of steam. All right, so that's why it's called a MACD, moving average convergence divergence. Now this one down here kind of shows you the what the histogram, the difference with the histogram. So these two are just the moving average lines. There's a 12-day and a 26-day. This is not the MACD because you need a signal line in here too. What the MACD does is takes the difference between those two as one line and then compares it to a signal line. So when they cross over, then if they cross over from the bottom to the top, then that's an uptrend, and vice versa. From the top to the bottom is a downtrend. By the way, all of this you can find on stock charts under the chart school setting. You can just search on MACD and learn all about it. The MACD histogram is essentially taking those two moving average lines and the signal line, taking the MACD, which is the difference between those two moving averages, and subtracting the signal line, which essentially shows you the distance between the lines. The wider that it is, the more powerful the move, the trend. The narrower that it is, the less powerful the move. You can also look at whether it's above or below zero. So if this MACD line is below zero, then that is a negative trend. And when it gets above zero, that is a positive trend. So that's another way to look at that. So let's look at my chart here. Now you might say, first of all, the thing that might jump out is, let me turn on the legends here. First thing that might jump out up here, and this is a MACD essentially, but what I use is something called a PPO. PPO is a percent price oscillator. It basically is the MACD. The MACD uses actual values, whereas the PPO uses percentage values. So it's showing you the same thing. It's just a percentage move rather than actual number. And any individual chart is going to look the same. You can use either one. And a lot of times I'll just call this a MACD because that's basically what it is. But it does help when you want to compare two charts. So if you want to compare a $100 chart with a $10 chart, now you might want to use percentages to see how they vary. The light one in the back, I'm not going to talk about that too much, but it's essentially a stochastics. Stochastics shows you overbought and oversold components. The MACD line does not show overbought and oversold because there's no upper and lower limit, whereas the stochastics has an upper limit of 80 and a lower limit of 20, which means if it gets above 80, that means it's a strong uptrend, but it might be nearing the end of the uptrend. Same thing if it gets below 20 and then starts moving higher, that might be the time to buy. You can actually see it right down here. So the stochastic started to move up. That was the buy point. That's the reason I make it light, because I just want to see it. I don't use it exclusively to determine entries and exits. I don't use any one indicator to determine entries and exits, but it helps to confirm what the MACD is showing. All right. The other thing you might look at, when I showed the MACD, I said the standard settings were 12, 26, and 9. Well, I like to use Fibonacci numbers. That's just a personal preference that you don't need to do that. The standard settings are just fine. So you can use the 12, 26, and 9. You don't have to change anything. But if you wanted to change them in stock charts, just a matter of coming down here. First of all, select the indicator. So there's the price performance percent price oscillator right there, and the MACD is right here. They'll look the same, and then you just change the parameters. So I changed it to 13.34.8 rather than 12.26.9, which is the standard setting. Personal preference. There's not that one's better than the other. All right, so whenever these cross, especially if this has been below the zero line, which in this case it was, and it crosses above, and you get green bars down here, and the force indicator, which I covered in the last session, down here crosses above the zero line. And this one, which I'll talk about in a second, also starts crossing over. That's multiple indicators signaling this is just about to begin an uptrend. So that identifies that right there is the time to get in. You can, if you're actually watching Palantir, you would see the red bars, and then you see a green bar, and then another green bar right at the time when all these started crossing. So you can actually get in that day. Market just closed. Dow down 190. We'll look at the chart in a second. So I think this was earnings, so it gapped up right there. So you still could get in there because all of these signals had just started. So you can see the nice run right there. By the way, let's see. This is live. This is where we are today, right there on Palantir. All right, so that's the MACD on the top. That's the way to use that. I use a PPO, but MACD is exactly the same, so you can use either one. Some charting platforms, by the way, do not have a PPO. So MACD is probably the one you would want to use. For instance, Thinkorswim doesn't have a PPO. So I use MACD when I use Thinkorswim, which is what Schwab is migrating everybody to. Down here, let me first turn, I'm going to turn off one of these MACDs. These are MACDs, so I'm going to turn that one off. And then I can show you how to build it as well. So remember last Monday I said that these bars are based on a 13-day moving average and a 13 MACD. And the force indicator, which is in the background, incorporates volume into it as well. So now it's adding volume into this trend and momentum indicator here. And it's a pretty accurate indicator when things change. You know, when it flattens out like this, then the trend is still, you know, in one particular direction, but it's weakening. But they use 13. So 13 for the bars, 13 for the force indicator. Now, if you take 13, so that's a daily, 13-day moving average, and you multiply that by 5, if you want to look at what a week would be, 13 times 5 equals 65. So I've been using this for a long time on my charts. I put a 65 MACD down here because this gives me on the same chart, it shows me what the weekly trend is right alongside the daily trend. So I can see the daily momentum and trend as well as what the weekly is doing. So when the weekly confirms either way, so if the weekly is confirming going up and these are confirming going up, that's a much stronger confirmation. Again, never use only one indicator, use a number of them together. Now, the way that this is built is it uses a 1, 65, and 0. So remember I said the third number is the signal line, and the 1 and 65 is the difference between a one-day moving average. One-day moving average is essentially the same as price. So this pink line right here is a 5-day moving average. A one-day moving average would follow price exactly, would follow the close of price. So 1 is basically the price, and the 65 is a 65-day moving average. Remember, 65 equals 1 week. So I'm comparing 1 day to 1 week. And that's why this gives you a weekly view. Now, there is no signal line because I don't want a line going through this, a second line going through it. I just want to see whether this is above or below 0 and whether it's gaining or losing momentum. So this is basically a weekly view. Now, when I discovered on the market timing system, I discovered a longer MACD from seeing Turner Capital at the Money Show. And I reverse engineered their system, and I realized that it was a 2150 MACD. So I thought, well, you know what? What if I use a 2150 just like they do? So 21, comma 50. So it's a difference between a 21 day and a 50 day. And again, I'm using 0. I don't want a signal line. I just want the difference between 21 and 50. But instead of putting it below, I want to put it on top of the same chart, this one up here. So in VectorVest, in stock charts, you just say behind indicator. You can make it above your main indicator. You can put it behind price. You can put it below, like this one here is already, the 65, or you can put it behind the one right above. So I'm going to put both of these together. I'm going to make this one green, and I'm going to make it opacity 0.4. So it's a little darker than the gray one up here, which is the 65. And then I want to have a moving average line just to highlight it so it's easier to see. So I use for an overlay, simple moving average, and I put in 1 colon green. I want that line to be green. Now, when I click on update, there it is. So now you can see the much longer term moving average along with my weekly moving average. You can think of this as more like a monthly moving average down here. But now I can start to see an even better confirming signal because I'm watching these as they cross. Not when they cross 0 now in this case. This right here, they happen to be at 0. But when the gray one crosses the green one, that's what I want to see. That's when I know that the trend is getting ready to reverse. So right here was just about the 0 line, so that's a much stronger signal. Right here is a little above the 0 line, but that showed that the trend was down. And as you can see, the trend continued down. So all of these together, this now uses a MACD. This actually is the MACD. It does not use a signal line, so I have 0 at the end. Uses a weekly, which is a 165, and a monthly, which is a 2150, combining those both together. Now, you can't do this on Thinkorswim. Interestingly, I've tried, and it just does not look very good at all. You can't really see it very well. So that's one of the reasons I like stock charts so much, because there's so much flexibility in creating these charts. So that's basically what the MACD does. Hopefully that helped you understand it. But if you want more information on it, just go to Chart School in Stock Charts. It's free, and type in MACD and you can study that. So I use a MACD up here. I call it a PPO, which is percent instead of real numbers. And I use a stochastics just to confirm the overbought and oversold signals. All right. And then this one down here is a much better confirmation. This is a great confirmation, actually. I've been pretty amazed at how well this one here actually works. And you can see right now with Palantir, it's actually crossing to the downside. It's actually gone below the 21-day right there and crossing to the downside. If I want to look at, let's look at the Qs using the same one. You can see the Qs. This is what I was telling you. I can see these when I do my market bias update. I can see this is only a day or two away from the short-term signal triggering. The MACD up here is already triggered way back here. Even though it continued higher, it's telling you the trend is running out of steam. The stochastics gives you the overbought signal right there. So right about here, it was overbought and started heading down. You can see the force indicator has actually been kind of moving back and forth, but right now it looks like it's really moved lower. And then this one down here is just about ready to cross over. So I think the market only needs 1 or 2 more down days. As I mentioned last time, 1 more day down and VectorVest will give a confirmed down signal. If I look at the QLD, which is the double leveraged, you can see on the 5-day moving average, you can see it really well over here. It has not yet crossed the 21-day, but 1 more day and it will. 1 more day down and it will. So the question is it going to bounce on this 50-day right here? Or as you can see with this one, this is just ready to cross over as well. All of that combined, means, the whole market looks like it's starting to roll over. So it doesn't mean it will. You never know for sure. But on this market timing strategy that's on the website, if we get a confirmed down from VectorVest on Monday or even Tuesday, then I will, even if now the short term, I just showed you one more day and that's going to turn bearish. The midterm, so here's the short term. You can see right there, one more day that will turn bearish. The medium term, this blue line has to get all the way down to the red line down here. So that one will still have a ways to go before it turns bearish. But if I get a confirmed down, so I'm using a combination of VectorVest and stock charts, these signals here, these technical signals. If I get a confirmed down on Monday or Tuesday, even if we only have a short-term bear and these two are bull, I'm going to change that to go to cash. And then we'll just wait and see. We'll wait and see what the market wants to do. All right, so hopefully you understood how the rest of my chart is put together. Incidentally, on my website, under chart lists and scans, for those that use stock charts, I have a bunch of chart styles here that I use. And this one here is my standard chart style. Actually, this is not the standard. This is a one from before. I have to update that. But all the chart styles are in here. So you can very quickly see those. Before I leave you, let me take a look at how we closed. All right, so we had a pullback at the end. You can see the volume, the last 15 minutes. Actually, this is a 15 second update. But this is a 5-minute chart right here. So you can see the volume every day on a 5-minute chart. It's pretty high. Today was options expiration day. So a lot of times what happens this week, you can see the downtrend right here, right into options expiration. A lot of times that carries over into the next week. And if that does happen on Monday, then we will be getting confirmed down signals on Monday. All right, that's it. Hope everyone has a great week. I will try to provide some updates and make sure that the newsletter gets out if I get a good signal from Cabo, which I can't guarantee, but we'll see. So anyway, have a great week, everyone, and be cautious. Take care.